Hello everyone, a very good morning, good afternoon and good evening to all of the viewers from around the world. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at one of the derivative indicator of the directional movement index, and this derivative is called as only directional movement because it actually takes into consideration both the positive directional movement index and the negative directional movement index, which we had seen in the last session, how to calculate, how to use those two indicators. And today we have this indicator which is derived from both of those indicators. It is simply a derivative of that, and I will explain to you how we can take advantage of this particular indicator. Just a few seconds. My laptop's battery is low, so I will just connect the charger. 20%. It will last. Okay. Now coming back to the indicator, let us now head to the JForex 4 platform, the newly released trading platform from the Dukascopy Bank SA. Here you will find these indicators listed amongst the momentum indicators. So all you have to do is go to this momentum indicator list and there it will appear, or else you can simply do a quick search. That is more efficient way of locating this indicator. So here it is, directional movement index DX, or simply type in the DX and it will appear. Here we have it. This is the USD JPY chart with the hourly candle period, and I have plotted this DX indicator with these default parameters of the 14 being its calculation period under consideration. Now its concept is fairly simple. It takes into account the difference between the positive directional index and the negative directional index. So if we have the positive directional index above the negative directional index, then we will have the difference on the positive side. But if we have the negative directional index above the positive directional index, then of course the value is going to be negative, indicating the bearish sentiments prevalent in the underlying instrument. So we have to pay attention to this output value. We will have it in positive territory as well as in negative territory, depending on how the momentum is unfolding. In recent past, we have seen the value of the DX indicator mostly staying in positive territory. We are not really getting any instances of its value being negative. I think it is bounded indicator. So I think I made a error of judgment. We probably have these caps defined for this indicator with its lower value being capped at 0 and the higher value capped at around 100. To be sure, I will have to check it, but the difference is considered to be indicative of the trend. So when we have these values on the higher side inching towards the 100 or quite around that, then we have to consider the trend to be strongly bullish. And if we have the output of this indicator below 50, then that is considered generally indicative bearishness. So we have this 50 acting as a critical marker. 50 can be a gauge of the strength of the trend as well as the directional indicator for the trend. If we have the output value of this dx above 50, and at the same time the value is also being supported by the price action data, then that is considered strongly bullish. If we have the output of the dx in below 50 range, and if it is declining, then that is considered as the marker of bearishness, bearish sentiments being prevalent in the instrument, in this case the USD JPY. So that's a simple concept. So you can utilize 50 as a critical marker for making trading decisions also. I think that way should work as well. And other way is to simply look for the overbought and oversold scenarios. And in the overbought oversold scenarios, you can try to look for contra trend trading opportunities. So if the prior trend has been bullish, you can start looking for opportunities to go short if we see consolidation on the higher side. And if the prior trend has been bearish, then you can start looking for opportunities to go against the trend after seeing some consolidation in the underlying instrument. So both these systems are likely to work quite well, and we can have the system defined, the conditions defined in such a way to take advantage of both these scenarios for trading purposes. So now coming to its editing options, let us see how we can further customize this indicator to take advantage of these interesting indicator. Mostly we can vary its calculation period. If you want the trade signals to be generated from the lower time frame data, then you can utilize these time period to be on the lower side. So if you simply want last only 5 hours worth of data to be taken into consideration for the calculation of this indicator, then you will have these sharp moves from the output value on both the sides, as the trend will keep fluctuating from one side to other in near term. So we will have a lot more signals generated, and frequency of these signals is also going to be a lot higher. But of course the reliability is likely to be a lot less, and we will see frequent changes happening in these directional movement output value. So dx value will sharply continue to move sharply. Sometimes it will appear above 50, and in next couple of hours again it will drop below 50, and then that cycle is likely to continue. So if you get the calculation grade on the higher side, so instead of 5, if we make it 50, then there is going to be a lot more smoothing. These output values are not really going to fluctuate much, and we will have lot less responsiveness of these indicators output. But whenever the signals are generated, those signals are likely to last much longer, and the defined trend is also going to last much longer, as it is going to be defined using larger time frame data into consideration. So this is the one point which has to be kept in mind. The lower time frame will give you a lot more responsiveness of the indicator's output in conjunction with the price volatility. Whereas if you consider the higher time frame for calculation of these indicators, then the lag will be there. The indicator is not going to be that responsive, but the reliability factor comes into play, and the signal generated will be lot more reliable to trade with. So this is the point. It is likely to work on both sides. So you have to make a trade-off on how much reliability and how much responsiveness you want, and according to that, you have to define this rate for calculation of this indicator dx. So as and when you will set this calculation period, it is going to play a important role in having the trade-off generated for the responsiveness and the reliability of trade signals. Okay, now coming to its further output, we have the choice of keeping it plain dull blue line, or we can style it up. So we have all these options there. You can go for brighter colors, or you can go for darker colors. Style can be this simple line, or you can keep it in form of bar chart also, or even other styling options are there. Width can be increased or decreased. The transparency factor can also be applied to get at desired level of these prominence for the indicator. Coming to the advanced editing options, if you want the output for the current period to remain constant throughout the current candle, then you have to opt in for this, and then this output value will be locked for throughout the current candle period, and only when new candle is plotted, it will appear, new value will appear, which will then remain constant throughout that candle period. All right. Highlight the time period zone if you want the time period zone to be highlighted, the time period which is used for calculation of this indicator. Then you can easily check here what is the calculation period and it will be highlighted. The calculation can also be customized further. You can use these indicator for all the instruments available on the chart. So whenever you will change the instrument of the chart, the new plotting will be done for the new indicator, new instrument. But if you don't really want these plotting of the DX indicator to appear for any other instrument, then you can simply specify the instrument of your choice on which this plotting should be done, and only for that instrument the plotting will be there. The same principle applies to defining of these calculation period. If you want the candle period to be used from the chart, then you can opt for these options. So whenever you change the candle period, for example, say for 5 minute to hourly, so as you change the candle period, the new plotting will be in accordance will be in accordance of these newly set candle period. And all right, so we have this indicator now plotted using 10 minutes of data, and it is going to change again if I change it to say 30 minutes. So whenever you change the chart's candle period, it will be plotted using new candle period. So if you have opted for this option of use the candle period from the chart, then it will work like this. But if you want the indicator to be calculated only for the fixed time frame regardless of the current candle's charting value, then you have to specify, and only for that candle period the indicator will be calculated regardless of what is the candle period as per the chart. So here the chart is of 30 minutes candle period, but the dx indicator is being considered calculated using the candle period of 15 minutes each. So that is the reference. Now, let us consider what are more customization options. I will now restore it back to use from the chart. The spread side can be ask or bid. We simply have to use it from the chart. So both these options are there. The indicator, if you want to be available on the all candle periods whenever you change the chart, then you have to opt in for this. If you opt out of this, then you have to specify on which time frame this indicator should be plotted, and only on those time frames the indicator will appear, and on other time frames there won't be any plotting of these indicators. So this is the hourly, and there is no dx plotted on the bottom, in the bottom half of this chart. Base period can also be defined using these four options. It can be none, 4 hours, day, or week. Generally, it doesn't really make much of a difference. All right. So guys, this is it from my side for today's session of JForex indicators explained, and I have tried my best to explain the concept, the uses, the possible interpretation of these indicator, the DX indicator. I hope you would try it out to see how you can make trading decisions more profitable using these indicators. So do try it out, see how you can customize the indicator as per the requirement of your trade system, and then you can go for higher probability trades as and when those signals are generated. For further coverage of the market developments, do check out the Dukascopy analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out the newly released trading platform, the link has also been included in the bio, so do check it out. I'll be back tomorrow with a new indicator, new explanation, new uses. So do come back. Thank you all for joining in.